Welcome to Brownfield's ongoing coverage of COVID-19's impact on the ag industry. In previous webinars, we've talked about COVID's impact on the pork sector, on the beef sector, and grain and ethanol. Today, we're going to turn our focus to the dairy industry. With us, as always, is University of Missouri, Scott Brown, and also Caitlin McCulloch, Director of the Livestock Marketing Information Center. Hello.
Hello, Megan.
Thank you for taking some time to spend with us today to talk a little bit about what's been going on in the dairy sector. As we record today and begin our conversation, the president just rolled out the details of the ag assistance that's coming in. So as you guys take a look at this first blush, what are your thoughts about how this plays out for the dairy sector? Scott, we'll start with you.
Yeah, Megan, so first of all, we've seen this all for a few minutes at this point, but I will say it certainly looks like some good news for the dairy industry when you see the payments part of the CFAP program that's been rolled out this morning. Looks like we're talking about for first quarter 2020 production that producers will receive $4.71 per hundred. Again, on their first quarter production, that would include any milk that was dumped as well would be eligible for that payment. And then there's another second part of that payment that looks like to me will be associated with kind of that second quarter loss, if you will. It's going to be a national adjustment to each producer's first quarter production multiplied by $1.47. So we are seeing some real direct payments now as a part of that CFAP program getting out to dairy producers. And when you think about the level of those payments, it's certainly going to be helpful relative to what producers would have been seeing in terms of milk checks here in 2020.
Caitlin, your thoughts as you take a look at those details?
I think it's great news for the dairy farmers. They've faced significant price loss just over the last 3 months, and now heading into second quarter, we're seeing a little bit of improvement in some of the commodity prices. But this should go a long way to help those balance sheets and help those farmers weather some of those losses here early on.
As we get into our conversation today, we're going to kind of cover a variety of things. We'll take a look back. We'll look ahead as well. Scott, you mentioned milk dumping. As we kind of take a glance back at the last couple of months and the impact of COVID-19, what exactly unfolded that led to the news coverage and all of these stories of milk dumping?
Yeah, so I think I sometimes always like to start by reminding us this is not the first time we've had milk that's been dumped. This is probably one of the largest events we've ever had, but I just remind us every once in a while we get in a situation, sometimes it's been driven by adverse weather conditions that don't allow milk to be picked up in a timely fashion that ends up in some dumping. But other times we have been in a situation where it's been tough to find a home for milk, and occasionally you'll find some loads that would have been dumped along the way. So not a brand new thing, but certainly has gotten a lot more attention. I always like to say that when you think about what really happened, I go just like some of the other industries that you and I talk about on a regular basis, Megan. Food service basically shut down for the dairy industry. So what was milk that was being processed into dairy products like cheese and butter? We no longer needed that cheese and butter, and as that food service side dried up, and again, hard to shift that to the grocery store side in many cases, it ended up in a situation where that milk just did not have a home, and rather than try to pay transportation to move it somewhere else, which was difficult to find, we saw a situation where there was a lot more milk being dumped as a result. And as much as we don't want to really see that happen, I think from a producer standpoint, it was one of the few options available to them. I know there was a lot of stories about grocery store shelves being empty of milk at the same time we were dumping, but to me those were not easily correctable problems. The infrastructure, the just-in-time delivery, all of that creates bottlenecks that made it, unfortunately, a situation where we're going to talk about a lot of that milk being needing to be dumped.
Caitlin, is there just not a switch where we can go from the tracks of it going to the retail side of things and be just kind of shifted from one to the other?
So Scott hinted at several of the issues that we're talking about when we want to discuss moving milk around. For one thing, perishability is a much bigger issue in milk. When we're talking about backing up cattle, hogs, chickens, you're still talking about days, weeks, months, whereas milk doesn't have quite that long of a shelf life before you need to process it, pasteurize it, etc. And so there's a holdability issue there. The transportation and logistics issue of how quickly can you move milk around? Is it cost effective to do so? How far does it need to travel if certain plants aren't accepting milk at different times? All adds to that complicated problem. And then, as Scott mentioned, you can't just switch from wholesale to retail. The packaging and volumes are quite a bit different. What would have gone to a restaurant is probably not what a family of 4 could have used in a week. And so you do need to take steps to make those packages smaller in a lot of cases than what a food institution or a restaurant might have taken. One thing I also wanted to bring up, as we're looking at this, we've talked a lot about pent-up demand and what does that look like once people start going back. The milk industry lost a lot of consumption during that school period that just will be unable to get back. And so yes, there's going to be a bounce back in products like cheese and butter as us restaurants opening up, but I don't think we're going to be able to regain that this year. The consumption that you've lost over this certain period of time is just that large at this point.
Is there a concern about what happens as we've seen reopening start slowly? I'm in a state that's taking a very slow approach to reopening back up, but there's even talks of potentially not easing into school this fall. Do we get nervous about that whole market and availability and where that goes if we see the non-traditional education at home starting the school year?
Well, I'll go ahead and start, Megan. I do think individual families have bought more milk at home. We've seen a huge rise in cereal consumption, but in general, before COVID, fluid consumption was on a downward trend, and this event might just amplify that. So yes, we're seeing a little bit more in-home consumption, but I'm not sure it offsets what would have been consumed through those other channels.
And we're certainly going to be interested in getting that school lunch milk use back come this fall. And if we aren't in that traditional setting, then I think we continue to be worried about what happens to fluid use. Now, exactly how school lunch happens, if it's a non-traditional way, I'm not going to predict one way or the other about do we find other ways to get that product to kids who need better nutrition. We very well may, but traditionally we really think about ramping up that fluid use back when school will start in the fall, and it's something that we need to have happen to be, I think, more helpful to the dairy industry. So we'll wait and see just how this all unfolds. That's the uncertainty of. I think we're both great at telling you what has happened. We have a much harder time of talking about what is going to unfold moving forward. And to me, it all depends a lot on just the exact path of COVID-19.
Let's talk a little bit about what's going on with milk supplies today. So how has what happened previously at the start of COVID-19 changed into what we're seeing with production currently?
So so number one, you catch us the day before we get a milk production report. I'd sure like to be able to see April milk production, because I think that's going to be our first real glimpse of what has been a number of cooperatives around the country running base programs. So base programs talk about what you'll be paid for what you traditionally have marketed versus anything that you might have been marketing over that base, and different co-ops have had different rules in terms of over base production. But generally, these co-ops are trying to discourage growth in milk production. I expect we'll get some of that discouragement coming through with the milk production report that will get out tomorrow. What we know, frankly, was an industry that I will say for the first 3 months of the year was actually growing faster than we anticipated. I think the traditional logic or traditional reasoning back early in 2020 was that this was going to be a better year for dairy producers because the growth in milk production was going to slow enough to put supply and demand in better check. Yet you look at the March milk production report, the April report that gives us March numbers, up 2.4% in the country. I think that exceeded a lot of folks' expectations going in. So it was kind of the worst possible outcome in that we were growing supplies maybe faster than we anticipated. And then all of a sudden you have a huge demand hiccup on top of that. It really made the problem amplified, and it took a while for us to get supply and demand back in better balance. I anecdotally hear that we've gotten ourselves in a much better situation in terms of the amount of milk being dumped. And I'm not saying we aren't dumping milk today, but I think the amount of milk being dumped is a lot less than it might have been a few weeks ago at this point. So we'll wait and see what we get, but it seems like we've slowed the supply side, and we'll start to see that in milk production reports.
Caitlin, knowing that if we're slowing the supply side, how does the industry ramp itself up then as we start to see markets reopen, but the country start to reopen and we start seeing more demand needed at restaurants and those types of areas?
Well, Megan, you're asking the $1 million question, is what happens from here in terms of restaurants and food institutions and places where you consume dairy outside the home. As much as consumers are wrestling with how to do all this, processors are needing to know that ahead of time to produce the product that needs to get there. And so that it's always a balancing act, but a much more uncertain balancing act at this point in time. I think there's this somewhat of a feeling, well, once we start opening these things back up, it'll all just go back to normal. And I don't think that's going to be the case, because you're going to have situations where you're still going to be socially distancing. So maybe a restaurant which would have, maybe it's using only 70% of the products it would have in terms of, and I'm just ballparking here. I don't have any idea what that looks like, but I don't think we're going to be back up to the consumption levels that you would have been immediately. It's going to take time to open that up. And so as those market signals come back through the supply chain, it becomes really interesting. And as we look back in time, other black swan events have had their own curvature of how you adjust supplies and what dairy farmers do on farm. And COVID-19 is going to be no different. It's going to look different. It's going to be unpredictable to some extent. But as Scott mentioned, I can look back at what happened over the last 6 months and say, dairy prices were very strong heading into the fourth quarter of 2019. And we saw dairy farmers add more cows than maybe we thought in the first quarter. And then this coronavirus really started to take hold in the US, and the whole picture changed. So I think I'm purposely maybe not giving you a straight answer because we just don't know. But ultimately, it's going to depend on how quickly we see those milk prices come back into line. Now, fourth quarter of 2019 was probably one of the best quarters we'd had in the last 5 years. And so to put that in perspective, and now we're facing prices that rival 2009. So it's a very difficult situation. You've had a very strong, sharp reaction to milk price just in the last 3 or 4 months. And so that's going to be the environment that dairy farmers are cautiously going to have to look at moving forward.
I think volatility, as we've talked about, beef, pork, grains, ethanol, you name the commodity is going to be the name of the game moving forward. There's been a little bit of good news. Cheese prices have moved up rapidly in the last couple of weeks. You might want to thank my high school senior and 2-year-old twins who constantly consume cheese for part of that. But is that anything to do with everybody being at home also?
Well, so I guess I think when you look at what's been happening, you really have a couple of things at play that have moved cheese prices much higher. And let me start by saying, when you look at cash CME cheese prices, we got to $1. I would argue that was almost too big of a response to the downside to what was going on with coronavirus. But you just had a lot of uncertainty setting there. Now that we set at $1.80 plus, I now go, I'm not sure we can support $1.80 plus cheese for the long period. And so what's been happening, and I go, again, don't forget what I think has been lower milk supplies have been at play that's helped pull cheese prices higher. But I do think we are getting some demand pull, and I think Caitlin has kind of hit the nail on the head here. To me, a reopening is kind of a surge in interest in things like cheese, but don't mistake that for long-term strength. I think pipelines could fill relatively quickly, and then all of a sudden we're into what happens when consumers have less money in their pockets. What happens when we're only running at X% of normal capacity? I think all those things could then dampen the enthusiasm for things like cheese prices. So again, I expect a lot of volatility. I guess from a producer side, though, I remind us there's a lot of risk left out here. Sometimes I think we can get lulled into, well, we're coming out of COVID-19 and everything's going to be better moving forward. There is downside risk. We don't know what happens as we reopen with certainty in terms of new cases, et cetera. When do you want to let somebody else have some of that risk? And I just say that going, it's prices have moved nicely in the last couple of weeks. What makes you want to take advantage of some risk management out there? This could be a time to do that.
Caitlin?
So I'll talk about a few positive things for dairy. One thing is we are in an environment where feed costs look like they're going to decline this year. And so that's going to improve those feed margins quite a bit on the dairy side. The other thing, we talked earlier in this program about some of the government assistance. When those payments come, will certainly help people. But I think, again, when those checks arrive and how long you have to go at some of these lower prices is probably going to be dependent farm by farm, depending on where their financial situation lies and what their positioning is. But overall, I think the year is still going to be a big demand side issue year in terms of where it goes, what we're thinking about, and supply is probably going to play catch up in the sense of trying to figure out where that level is. And as I think Scott's absolutely right, where you're going to have periods where maybe prices are run up very quickly and then come back down and possibly go the other way. And we're all settling into this new normal and what that means for milk demand moving forward.
Let's talk a little bit about some policy. We mentioned a little bit about the government, the ag assistance at the top of the program, but what about dairy margin coverage as well as food box programs as well? How do those and how are those benefiting producers? Caitlin?
So there are several risk management programs out there, and I think if you were involved in those pre-coronavirus, they probably were to your benefit. One of the difficulties has been is that once the market started to unravel, it was very hard to hedge, but depending on what programs you were using, because prices fell apart relatively quickly. In terms of the CCC funding that's going to purchase dairy products, that's going to remove quantities off the market and hopefully help balance that supply and demand situation, especially given the uncertainty of it.
Scott?
Yeah, on the dairy margin coverage side, so I like to remind folks, so I think, again, when we looked back at what I would consider the very low point from a price standpoint, there was a lot of information sitting out there about we're going to make billions of dollars of DMC payments to producers, and we very well may still do that. I just remind everyone that things like Class 3 futures have come up, quite a bit in the last few weeks, and it's reducing the potential for DMC payments, as we move forward. So at the end of the day, we may end up spending less on things like DMC than we expected. And to DMC in particular, we didn't have that many folks sign up for DMC this year. You have to remember, sign up was ending at the end of 2019. It was kind of this period of a lot of optimism in the dairy industry. I think you had a lot of producers who, by the way, made the decision that, well, I don't really want a lot of DMC coverage in 2020 because it's going to be a good year. I like to take this point to remind folks that DMC is a risk management tool, and by not participating, you better find some other risk management strategies. And so I think we've had a lot of folks who didn't take advantage of what was there. I do think DMC is going to provide some support as we move forward, but again, maybe a little less than we would have anticipated. You couple that together with what we talked about at the start of the program, and you get some real help for producers. I think we probably remiss in not reminding folks that our payment limits associated with the CFAP payments that are going to be coming, it looks like anywhere from $250,000 to $750,000 in terms of those payment limits, depending on whether you are 1, 2, or 3 entities eligible for payments. But again, I think a lot of help relative to the market price decline that we've seen. On the food box side, yes, dairy is certainly a part of that expenditures that we see happening in that program. $100 million a month may seem like a lot of money. I just remind us it's a fairly small piece relative to overall consumption. I think for dairy, the thing that we really have to remind ourselves is that demand for most dairy products are extremely inelastic. All right, so what's that really mean? Small changes in supply and demand can give us pretty large changes in prices. So even these food box programs, although they may not be moving that much product, it doesn't take much to make dairy prices move. And to the volatility issue, I sometimes say dairy might be the most price volatile because of just how inelastic demand is for many dairy products.
Can we talk a little bit about some of the base programs that are instituted by cooperatives? How has that helped the industry through all of this?
So number one, I think it's helpful. I sometimes remind us of a little bit of history. It's always been co-ops more than willing to take whatever milk supplied by producers. So kind of a given that you have a market for your milk if you're a producer belonging to a particular cooperative. That all works well until you don't have a home for that milk at the end of the day. And so as much as producers may not be excited about base programs being instituted by co-ops, it does provide a way to manage in what's an otherwise extremely difficult time of way too much milk. The last thing you want is producing milk to get paid nothing for it. And so these are tough discussions to have. But I will say, those are producer-driven decisions being made in many cases, how to best participate in the co-op in terms of how much milk can be supplied at a given point in time. And if you want to supply more than that, of which, remember, these base programs do not say you can't provide more milk. It's just the value is not as clear. And so it provides a way to try to if you will, put a governor on milk supplies in periods where we really need it.
Caitlin, anything else to add?
I would just reiterate that it's designed as a more systematic approach to maybe what would have happened otherwise, right? By setting base levels, you can hopefully make that governor a more timed and less volatile approach than if you just let everyone produce or just paid everyone based on what the milk supply indicated. So you might have a lot more volatility in some cases otherwise.
As we close down and wrap up our conversations, Scott and I have talked, Caitlin, a lot about processing slowdowns and shutdowns impacting the supply chain on the beef and the pork side of things. We haven't had that much that same conversation on the dairy industry. Is there reason behind that?
So for one thing, dairy processing tends to be a lot more automated, and so inherently there are less workers in those plants, and the system isn't set up. It's a totally different process, so it's not the same as slaughtering cattle or slaughtering hogs, etc. And so to some extent, the volume of people involved in those sectors has maybe helped not have so many COVID-19 related labor issues. What I mean by that is absenteeism, closures of plants, etc. We haven't heard nearly as many disruptions specifically in terms of shutting plants down when compared to some of the other industries.
Scott, any other thoughts about that side of things?
I just think it's important that one of the differences has been a market for some of those dairy products, and that's been that food service market that just basically dried up. So, you saw processing really slow down on the dairy side as much trying to handle what was, hey, we don't need cheese or we don't need butter right now. And so producing it at little to no value just didn't work. And so the slowdowns, shutdowns that we saw in livestock, many times I think were more related to the direct issues in the plants themselves. And here we have a situation where slowdowns were much more related to just the food service slowdown and no real shift to the grocery side to make up the difference.
Last question for you both, and I thank you again so much for your time and talking about the impact of COVID-19 on the dairy sector and some thoughts and analysis about what's been happening. As we look ahead, let's talk a little bit and your thoughts on production and prices as the rest of 2020 unfolds. Caitlin, we'll start with you.
Sure. So we've used this word several times, but it's very uncertain sort of what we look at moving forward. But I'll mention feed costs again. I mean, those are expected to be lower than a year ago, which when we do see this market have a little more certainty, and it could lead to a better ability to play catch up here and have better production. When we look at dairy cow slaughter, it's below a year ago, year to date, although that's a little misleading because last year, first quarter had some very high numbers. So I think we are seeing a little bit more herd turnover, where that I think second quarter will be very telling on whether we see a significant contraction in the dairy industry. You might see some consolidation on the farm side, but typically you see those animals move more to other farms as opposed to come out of production. That at least has historically been the case. When some of these payments come in line might help address some of that and time the slaughter a little differently. But again, as Brownfield News has covered, there are a lot of slaughter plant issues still. And so getting those cows, the ability to market, we've seen the fresh 90s price. So that's the 90% lean ground beef that gets mixed with 50% trimmings on the fed cattle side to make that hamburger that we all like to buy in the grocery store right now. Those prices are very strong. And so we've seen dairy cow slaughter hold up better than what you would consider beef cow slaughter. Beef cow slaughter has a similar pattern to what we've seen on steers and heifers. And so there is another dynamic here. It's not as easy as necessarily shipping the amount of dairy cow volume that you would. There still could be some slaughter plant issues that change that dynamic a little bit moving forward. Scott mentioned milk per cow has been pretty good in the first, a little bit better than expected in the first quarter. And so we did see the industry add cows, much more so than maybe we originally thought. And so we're working off a fairly high production number in the first quarter, but I would expect that to fall, but maybe not to the point of like a significant liquidation here in the dairy industry. Now, what does that mean moving forward? Well, as the economy opens and we do see better consumption, if not normal consumption, I expect prices to pick up as we start using more and more dairy products in our everyday lives.
Hopefully a good end to 2020. Scott, your final thoughts?
Yeah, so I see a lot of ebb and flow moving forward. Again, a lot of uncertainty, but I think we're maybe seeing the early signs of a little bit of that food service surge happening relative to things like cheese prices. If we're continuing to be able to see restaurants begin to open without additional issues, we can get some additional maybe short-term pull here going on. However, I think we got to remind ourselves that just the overall domestic economy is going to matter. Money in consumers' pockets. I worry about the contraction that we have in front of us and what's it mean for dairy product consumption. I think that could keep prices tempered as we get later in 2020. You know, you and I talk a lot about how just exciting export markets are for things like beef and pork. And I remind us that the same kind of demand could sit there for dairy products as well moving forward. So I guess I would close by saying I'm a little optimistic about where we can go as we try to finish 2020. I do think, as Caitlin's alluded to, supplies are going to be in a better place than where we started the year. And I think producers are going to be slow to decide to go add cows, given the uncertainty that we face. So less growth in supply, maybe a little stronger demand. Again, demand for me is all about economic growth. Could give us a better year than we would have anticipated. You know, I just remind us that I think we're slowly coming out of what I hope was the worst part of COVID-19. I hope I didn't jinx us by saying that out loud here today, but to me, if we don't have a big second wave unfold that shuts us back down again, that some nicer recovery can sit there for the producer side of this industry as we try to finish 2020.
Caitlin, Scott, thank you so much for your time today. We appreciate it.
Thanks for doing it, Megan.
To view our entire webinar series on the impact of COVID-19 on agriculture, you can see our past episodes that focus on pork, beef, and the grains and ethanol industry. Those are all online at brownfieldagnews.com/COVID-19. I'm Megan Grebner for Brownfield.